The major markets had another mixed week last week, as the Dow Jones led the pack with a 0.5% gain for the week, while the S&P 500 and MSCI World Index closed virtually unchanged for the week. Meanwhile, the NASDAQ and emerging markets saw losses on the week. After a substantial drop the prior Friday, the S&P 500 rallied to trade back toward the all-time intraday high of the prior week ahead of the FOMC minutes release on Wednesday. Ultimately, the Fed raised interest rates in yet another widely predicted move. However, there was one dissenter, as the Minneapolis Fed President Neil Kashkari later posted, "If we base our outlook for inflation on these actual data, we shouldn't have raised rates this week. Instead, we should have waited to see if the recent drop in inflation is transitory to ensure that we are fulfilling our inflation mandate." Coincidentally, economic concerns continued from the Midwest as the Illinois governor announced a special session to take place this week to deal with the ongoing budget issues. The state transportation department said they would stop roadwork improvements by July 1st if no budget was passed. This represents the third consecutive year without a budget, the longest span of time by any state. This led the Multi-State Lottery Association to announce plans to pull the Powerball along with the Mega Millions lotteries out of the state, according to the Chicago Sun-Times on Thursday. Surprisingly, the only major headline due to corporate action last week did little to spur the market forward. On Friday, Amazon announced the buyout of Whole Foods in a $42 per share cash deal. This would give the online giant an immediate foothold in the grocery market nationwide. As a result, many competing companies' stock prices fell on the news, as retailers Target and Walmart, along with the grocers SuperValu and Kroger, all saw drops following this announcement. Finally, Friday's Baker Hughes report showed that the total active U.S. rigs continued to increase to 933 active rigs. This represents a 41% increase in active U.S. rigs since the beginning of the year. In that time, the S&P crude oil index has fallen 20.71%, while the unleaded gasoline index has fallen over 25%. All this just as the summer driving season ramps up.